Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, November 7th. Donald Trump has been re-elected for a second term as US President, and Republicans are on the verge of securing both houses of Congress in the US. So, the so-called Trump trade is back in full force. The US equities, the US dollar, and Bitcoin are climbing, while treasuries, international equities, and major and emerging market currencies are under a decent selling pressure. So analysts around the world have mixed views on how major central banks and major central bankers will react to the Trump victory, with the first clues expected from the Fed and the Bank of England as soon as today. So finally, the US election was not much close to call. It ended with a clear-cut victory for Donald Trump, and the Republicans are on their way to winning control of both houses of Congress. And well, the market reaction to the election result was very clear for the US equities. The S&P 500 jumped 2.5% to a fresh record high. And it was the best post-election gain, apparently. Then the energy stocks in the US surged nearly 4% on Trump win. Nasdaq 100 advanced 2.74% to a fresh record high as well. Then Tesla soared almost 15% as Elon Musk's heavy campaigning for Donald Trump now leaves him with the super close connections to the White House and the Congress. Then of course, the Dow Jones Industrial Index surged more than 3.5% to a fresh record high as well, as bank stocks there rallied hard on Donald Trump's promise of deregulation. So Invesco's KBW Bank ETF, for example, jumped more than 10% yesterday. Then Bitcoin, of course, rallied to a fresh record high, and the small caps in the US gained nearly 6% yesterday on hope that Donald Trump's protectionist stance will help their businesses grow better. In the FX markets, the US dollar soared yesterday to the highest level since last summer. Gold dived to its 50-day moving average on relief that the US election result was very clear, and the dollar franc had the green light to step into the medium-term bullish consolidation zone. So, the Donald Trump trade went, quite smoothly and quite according to the plan. So US equities rallied, banks and small caps led gains, the US dollar gained around the world as the US yields rose further on anticipation of further ballooning of the US national debt. Then, everything that has to do with green, alternative energy, clean, they all lost ground. So that's within the US borders. Now we have beyond the US borders as well, where the sentiment was quite mixed. I was saying yesterday, actually, before the market opened in Europe, that the DAX and the Euro Stoxx futures were in the negative on fear that Donald Trump would hit the European companies with renewed tariffs. Well, you know what? They actually turned positive at the open for a while. I guess that was because we had this hope that Donald Trump presidency would call for a swift, dovish response from the European Central Bank to counter the shock, but at the end of the day, the gains in Europe remained fairly short-lived, and the European indices actually closed the Trump session or the post-Trump session in the negative. So on top, German Olaf Scholz called for a snap election in Germany as his three-way coalition collapsed. It collapsed under the weight of the economic difficulties in Germany after the energy crisis and the war in Ukraine. And the European car makers face a tough day as well, pressured by fears of higher tariffs from the US. They're also caught in the crossfire of the ongoing tariff war with China, remember? So among the European indices, the Swiss SMI index and the FTSE 100 index ended with relatively small losses compared to the others. The SMI because it's defensive by nature, and the FTSE 100 because the US dollar surge gave a certain boost to the FTSE 100 companies that actually get a very clear majority of their revenues from abroad. But, Trump policies are pro-US growth but anti global growth. Therefore, Trump's medium-term impact on mining companies' revenues around the world will not necessarily be positive. As such, copper futures, a gauge of global growth for investors, dived more than 5% yesterday as a reaction to Trump win. So that's the equity and the growth part of the US and the global macroeconomic story. But because nothing comes free, there is the inflation leg to this Trump story as well. So for the US, it is pretty clear. Pro-growth policies, tax cuts, tariffs, they all point at higher inflation in the US, full stop. And speaking of that, the Federal Reserve is expected to announce a 25 base point rate cut today, but the monetary policy of the Fed beyond today's decision must be readjusted accordingly to the Trump era, because in the sense, many investors are now betting that the Federal Reserve will actually continue to lower its interest rates, but at a much slower speed. The expectation so far was that the Federal Reserve would cut the interest rates today by 25 basis points and deliver another 25 basis point cut in the December meeting and a full point cut next year. But now the December cut is on a slippery ground, and some analysts and investors around the world believe that the Fed should not consider more than 2 to 3 rate cuts next year. That's at least the monetary policy's response that you would reasonably expect from, well, a central bank as an economist. But we don't know what the Fed will do. But it's going to be a difficult decision for Powell. Elsewhere, the views diverge, actually. Some believe that the US will export its Trumpflation, if nothing by a stronger US dollar. But other people argue that cheap Chinese goods, for example, which will be heavily taxed in the US, will simply spill over into the rest of the world and potentially keep price pressures contained elsewhere. We will see. We don't really know what will happen, but if the Europeans are, for example, very much concerned about lower growth in Europe and higher inflation as a result of a Trump win, well, they could still find an interesting midway with their Chinese partners to, I don't know, better shoulder the Trump shock together. But that's an ideal world, obviously, because then that would mean an important reshuffle of the international relationships across the globe. And because economics is just one part of the story and the geopolitics is another, well, China is not necessarily the best place to find a geopolitical partnership due to its close ties with Russia. So everything is very much complicated and we can go on forever with this discussion. But what you should keep in mind right now is, well, we don't yet know how the anticipated extra US inflation, which is quite sure, will resonate across the rest of the globe. We will see. And in this context, as says the French President Emmanuel Macron, the Bank of England has the hard task to deliver its first monetary policy decision post-Trump and post-budget. The Bank of England is expected to cut its interest rates by 25 basis points today. Now, the market is priced in 2 more interest rate cuts by the end of next year in the UK and gives a 35% chance for a third one. But of course, the Bank of England must also deal with the higher government spending in the UK that Rachel Reeves promised a few days ago, that actually alerted the Bank of England hawks that the monetary policy easing must be carefully measured and conducted to counter the fiscal expansion of the UK government. But since then, well, the gilt yields in the UK soared so sharply that they wiped out all of the UK's fiscal headroom. And now the bank analysts are actually lowering their post-Trump and post-budget growth expectations for the UK, which means that we are somewhere more dovish for the Bank of England bets than we were just after the budget. So in summary, no one really knows quite which foot to dance on right now. As such, all eyes are on the Fed President Jerome Powell and the Bank of England Governor Andrew Bailey to help chart a roadmap. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.